price of silver has been seen a dazzling surge of around 77% in the past 13 weeks or so. Its fortunes, though, seem to have reversed over the past few days. We are sitting at around $40 an ounce, and we've got a silver coin here owned by Simon Brown. So clearly he's a very rich man at this point in time. If you keep it on for longer, and if it rises significantly, some say it could go $60, $70 an ounce, Simon.
Yeah, I needed to go to a couple of $1,000s before it really gets to
How many of these do you have at home?
One.
Oh, just one. Okay.
Just one.
Not a rich man.
And it was given to me at $32. So I'm making money on that. Pull-extreme, I mean, silver was really looking hot, but perhaps frankly just too hot. You know, everyone's again, the Soros is selling, etc., etc. Silver was $18 at some stage in 2010. It almost hit 50 this year. I mean, nothing goes up by that amount without some significant pullbacks.
Well, the first point is silver is in a surplus. It's a surplus market at the moment. In other words, look at the fundamental flow of new metals to the market and demand. It's in surplus. But there is a positive demand side story. Virtually everything in the world today has silver in it because everything is electronic. Everything has some silver in it.
Second most used commodity after oil, apparently.
It's unbelievable. I mean, and this is, you know, silver's incredible strength, that it has a very strong underpinning supply-demand fundamentals. Well, really a demand story. Have a look at new uses. Everybody's familiar with the idea of putting your solar panels up. Yeah. Big growth in the solar area. That's a heavy user of silver. So there is an underlying demand story that I think people have bought into. But at the end of the day, it's a very similar story to gold and the PGMs, is that at the margin, you've had people looking for yield. There's a story that's evolved and developed over time, and you've seen hot money coming into silver. There have been a lot of people buying into silver for a long time, don't get me wrong. These are buy to hold. But in the last couple of weeks, it's undoubtedly been a flow of hot money on the back of this.
Momentum.
It's a momentum play. And you've seen, you know, silver running up to, what was it, $49. It's retraced a lot, and it's the same story in any of the other commodities. There will come a time where the new inflow, and this is a key point, the new inflow of dollars ceases, maybe even went slightly negative, and that's why you have these big pullbacks in price. And silver is, relative to gold, relatively in a liquid market.
Or do you think that it's poor man's gold, silver?
I think people play it as a lot of people play it as a gold.
So in other words, those that have sort of the weak money.
Well, I think people play it more in the gold-silver ratio. An enormous amount of talk about the gold-silver ratio. Quite frankly, it perplexes me. I've never understood why it is, but it's a bit like saying that I don't believe in Fibonacci chart reading. Well, people do, and they act on the back of it, so it can and will have market impact, and I think this is what we're seeing.
Okay, so Kobus, your view on the silver market. I mean, heading so close to that all-time high, and as Paul was alluding to, it's not a very liquid market, so any movement can have a significant impact on the price.
Yeah, I mean, you know, the gold-silver ratio is sort of sitting historically at around about 35, currently around, you know, 18 times, which shows you the amount of attraction silver got. And I think also, I must agree with Paul as well, I think shorter term you've definitely seen, you know, a massive interest in the metal, massive momentum in it. And, you know, there's a liquidity squeeze, and it sort of just takes the price higher.
And we've seen those 2 or 3 margin increases of that, which makes sense because, of course, you know, as the price goes up, you need to keep your margins. Yeah. But for the smaller traders, who often geared to the hilt, that margin increase actually means they've got to do some selling. To Paul's point, that, you know, there's a supply issue coming into market at all stages. Again, it's run hard margin increases. It's going to take that hit coming.
100%, and I think, you know, not just silver, but I think any metal, when you had a unique situation where you sort of getting to a scenario like we're seeing at the moment, why people want to buy something physically, like Paul also said, you know, they, for various reasons, I think they maybe get some comfort in holding something physically. It sort of has some sort of appeal, and I guess if it's a market, it doesn't have that liquidity and it's not used to that type of interest. You'll always see volatility around those interest points. Again, you know, it is dangerous. You know, if you're in these things, they can go your way for who knows how long, but it is a dangerous place. The risk reward, in my mind, of buying into like a silver physical holding is just not worth it.
Is silver and gold in bubble territory?
It's a tough one. I mean, I think part of my intuition is to say yes, part of me is to say no, because I mean, and the reason I say yes is that you've seen these rapid run-ups, and it's actually against the supply-demand fundamentals. You've seen these markets going up in price for one simple reason. Stocks have been building and people have been willing to fund those stocks. Take silver, the ETF, 19,000 tons. The ETF in gold has built to very high levels. That suggests to me that there's an element of the bubble to it. But there's also just an element of people, the fear story, low interest rates, a whole raft of things. People are willing to buy and hold these metals for considerable periods of time. I know we're going to talk about palladium later on today, but have a look at how the palladium position's been built up over the last 5 or 6 years. Those people have bought it and they've held it, and it's in very tight hands. And there's no doubt that quite a significant proportion of the gold and the silver that's out there is probably held in tight hands with a view to a range of diversification.
And this is physical. This
physical.
is the bars and coins under the bed in the garden.
Well, and most of it's in ETF form.
So let's play out the worst case scenario. QE2 comes to an end, things fall apart, we see the resumption of QE3. Do you think that we could see a massive sell-off? And it's something that you've mentioned before. I remember during some of your surveys, in fact, last year, you were saying that you were concerned that once this excess liquidity or the quantitative easing comes to an end, we could see a liquidation in the ETF market. Is that still your view?
Well, to speak to your point, if we see QE3, gold is definitely going higher. Right? If we don't see it and we actually start to see interest rates, I mean, this is going to be about, I'm a bit obsessive about this, but I think it's about the yield curve. And when the yield curve starts to steepen, and it will at some juncture, this is where the opportunity cost starts rising. And I go back to the most key point about all of these metals. You need an inflow of new money every hour of every day. So this is not about people selling out of their positions. It's just about people saying, I've filled my boots, I've got enough, thank you very much, I've diversified, I ain't going to buy any more. The price is going to go down. That's the problem.
So silver, you weren't hot on gold. Are you hot on silver?
No.
Paul, hot on silver?
I think I'm hot.
An average silver price last year in 2010 was $20 an ounce, so we're sitting well above that.
Look, where we see silver today, it's going to go up again.
Okay. Hot.
Yeah, hot. It is hot, and I like it. And it's got real use. I know it's a particular point. And even at $40, I think it's got a lot of upside. It's pulled back, but I think it can move higher.
Okay, let's move on to other industrial metals, platinum and palladium. Paul, let's kick off with you. We don't have much time left. Just give us sort of a synopsis in terms of what we're looking at with both of these metals.
Platinum has been in a surplus for a while. That's at a fundamental level. Again, the investor community have been hoovering this up. But the longer term view on both platinum and palladium is a positive one. The use in auto catalysts, it's going to be a growth market. There's no alternative. At the margin, you're going to see some pressure on platinum, I think, in the near term. But fundamentally, this is a very solid market. South Africa dominates production, high costs. It's a relatively good story in the longer term. But the caveat to all of this is both of these markets, palladium in particular, has a very big overhang of stock. Fundamentally, it looks great, but there's this huge stockpile in Zurich. In the case of platinum, you've had a fundamental story that doesn't look great, but the stocks are relatively small. So it's a difficult call as to where it's going to go in the next few months and years, because it could go either way. And in particular, if investors decide to pull out or stop buying, then you've got a problem for these metals.
The one thing, Kobus, here is at least we've got, in gold, none of our gold miners are particularly exciting. We don't have silver miners in South Africa. We have platinum miners. As Paul said, we pretty much as a country own the platinum reserves of the world. Investors can go and buy an Anglo Platinum plat if they want to get adventurous in Aquarius.
100%, and I think maybe if you want to put the two, sort of the gold against your platinum, I definitely think your platinum investment at this stage is more a fundamental, more of a non-consensus trade, more of a value trade, if you can call it. Whereas gold is very much momentum driven at this stage. So again, platinum, I share the view. I think there's a couple of things that's against the metal. We're seeing substitution coming through. We're seeing there's thrifting in the market. We're definitely seeing there is a trade away from potentially from light diesel vehicles. So the penetration rate is expected to decline towards 2015. And I think all those things may sort of hold the gold price back and maybe put it into a surplus territory for the next couple of years. On the other hand, obviously palladium, there's a couple of things that works for it. Obviously on the substitution side, there's an increased demand, and then very much in terms of Chinese and American demand in terms of their vehicle space is where that metal goes into.
Yeah. we've got such little time left, and I've got so much to say, and I'm sure you do as well. I know you've got 1 point for me. We've got debt in the Eurozone. We have India hiking rates by 50 basis points, even though we still see negative real interest rates. Out of the PGM space, what are you most hottest on? What is the hottest thing for you to be in right now, Paul?
In the PGM space,
Yeah.
probably palladium.
Palladium.
Or one of the minor metals. One of the minor
Minor
PGMs.
metals, what, rare earths or something
No,
like
no,
that?
the minor PGMs.
Okay,
You know,
fantastic.
iridium.
Great, Kobus.
Yeah, I would share that view. You know, iridium. It's amazing how that price pushed up to about I think it's $1,000 per ounce now, or around about there. And also from a palladium perspective, I think the fundamentals is really looking good in that metal. So those would definitely be the
Yeah, palladium, and there's actually a palladium ETN, so that people can go and get exposure directly to palladium.
Last comment, Paul. I'm giving it to you.
Well, the PGM space, it's South Africa risk, the costs of this industry are very high. So it's still in a longer term play, the PGM space is probably the place to be.